Good morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, April 16th. Well, we got some green across the board. Dow Jones up 89, S&P up 12, NASDAQ up 11, but that didn't come with a price of extreme price movement and volatility intraday yet again. So we're seeing this crazy price action intraday, and to be quite honest, it's really not great volatility unless you're a scalper. You're having a field day out there. Other than that, there's a lot of professional traders, novices, and individuals just getting stopped out here. Markets are absolutely insane at the moment. That's telling me that there's extreme price action and volatility, meaning that, that we're about to vacate the area. Now, we were looking for a bounce. We're looking for a holiday reversal. We are getting that. But again, it's not the type of volatility that we're looking for. And I want to show you this right here as a 5-minute spiders. This is the intraday volatility that we had. We had price moving higher. We actually sold off, and we flagged. So if you're looking for a price to move higher as a normal trader, you'd wait for the first pullback and then look for consolidation area and a reversal candle to look back to establish long positions. That didn't happen. It happened here. You probably got stopped out. Here's a bear flag, and now you're looking for a reversal to the downside. So you're looking to sell the next rally. You got a little rally here, boom, you got stopped out, and next thing you know, it's already 2 o'clock, and you had 3 trades getting stopped out. And that's why I always say if something looks suspicious or suspect, take a step back and then look to reevaluate. But when you're looking for, when your trading plan has, you need confirmation. Obviously, you're not going to just go out and blindly just buy the first rally or the first, or sell the first sell-off. You want to wait for that confirmation. Sometimes you get it, you get stopped out, and then next thing you know, it's already 2, 3 o'clock. Unless you just, you're a type of trader that likes to just get in quickly, and that's not me. I like to get my confirmation for my trading plan. But as you can see, crazy price action. Let me just show you what we have, what we're dealing with here since really Friday. Look at this: gap down, lower, up higher, and sells off at the lowest at the end of the day. Gap up, we sidestepped twice, and we sold off again at the lows. Just a rally, gap up, and the same thing. And now we are up pretty big in the pre-market, so we're going to gap up yet again. So again, establishing long positions on a gap up, you have to wait until the markets can at least give us the first entry. And by that, who knows what could happen here, because the markets are very volatile. And this is not the good volatility, as I mentioned. I got a bunch of emails yesterday, say I'm getting stopped out. I try to establish a position within a trend. Well, right now, this really isn't a trend, as you can see here. The markets are just crazy. That's why I said take a step back. When in doubt, cash is a position, It's clearly, you could see this is really not good price action here. Again, unless you're a scalper. If you like to scalp these highs and lows, then you're having a field day out there, okay? But if you're, a trader looking to establish a position, trying to hold them pretty much most of the day, that's not happening the last 5-6 days, and that's why I try to want to be cognizant of what the market is doing around you, and that's where we're going to go into our analysis today. Okay, so let's dive right in. There's 3 things that I've been pointing out: is the bonds, the Japanese yen, and of course the dollar. And I want to show you the bonds here. Bonds have not budged. Okay, we've had market volatility and we've had some movement to the upside. Bonds have not budged. That's a very clear sign of risk aversion, meaning that money's flowing into bonds to hide from that volatility that we're seeing in equity. So, and we're above a main support area now. All right, was resistance, now support. So keep an eye on bonds. If we start taking out this little area here, this little cluster then you're going to see definitely higher prices, and you're going to see some pressure on equity. So I'm watching what bonds do. Okay, Japanese yen, same thing. Look what's happening here. We have the ascending triangle. We did break lower for a couple of days, but came right back up, and now we're flagging into an average. Now, there's a lot of overhead resistance here, so I want you to be aware of that. But if we take out this Fibonacci cluster and the 200-day moving average, I do see clear skies right up to this little this new cluster right up in here. Okay, so keep an eye on the Japanese yen. If it starts to move higher, again, risk aversion, money's going to flow out of the market, and they're going to park into that safe haven sectors. Here's the dollar. Now, the dollar is interesting. I showed you a few days ago, we have a big head and shoulders pattern in the dollar. We have a resistance band of 79 to 79.50. And to me, the dollar looks like it's only flagging, bear flagging into into a major area of resistance. If that starts to break down and we start to lose, watch the commodity sector, they'll catch a big bid. If we get a big rise in the dollar, right now the relationship is inversely correlated, so you need to be aware of that as well. You're going to have a big rise in the dollar. You're going to see commodities get hit. So let's keep an eye on that, and let's see how the dollar reacts. But those are the three real main asset classes I'm watching for clues of equity markets. Now, two equity markets. We have the daily chart of the ES, and I'm going to show you the sweet spot. I mean, what are we doing? We're just really just bear flagging into resistance. I mean, and that's where I'm looking at equities today and tomorrow and Friday. And I mentioned that it's usually bullish, and that's why I like to keep that bullish tone, and we're getting it today as well. But again, we're up 9.5 handles in the ES contract, as you can see here on the upper right screen. So it's, to establish long positions now, you'd have to wait for a decent pullback in the markets in order to do so. So unless you came in long today, but you could see that we're back up into this area here. And that's really going to, the sweet spot for me is going to be that 1860 in the ES, and I'll show that to you now in the hourly chart. Okay, so what I've done is, as you know, I have the Fibonacci retracements on here, but what I did was I took a high to low, a low to high from here, excuse me, and I'm looking at a 61.8% retracement, which is going to be the sweet spot of the Fibonacci retracement area for a market to pause and possibly revert back down to the downside. So it gives me 1858, anywhere from 1858 to 1865, call it 60, 65, right up in here. That's going to be the sweet spot. And if that market can hold and price start to roll back down again, then I'll look to establish some short positions. But I wouldn't do it today, guys. I wouldn't do it today, and I wouldn't do it, this week. I would let this week follow through. We do have options expiration, which, as you know, generally has a bullish theme to the week. So I'd let the market go up, let it even test 67, 70 even, and then let's see where we go from there. Okay, but I think that's going to be the sweet spot in the ES. That's what I'm looking for the markets to hold in that area. Okay, now let's take a look at some of the overlays. As you can see, bonds, gold holding up well. Gold actually was down 30 points at one time and pretty much rallied back. So that was pretty interesting to see the way gold is rallying here. Bonds are doing well, as you can see, and also equities holding up well. Excuse me. All right, so let me get these out of the way for you. Okay, so again, I like to see the markets rally right up to the 20. Again, remember, guys, this is bullish trend. We're making lower lows and lower highs. Don't get so caught up that we're starting to make a new uptrend. At least yet, let the market prove itself that we are moving higher here, okay? So we have the 20. So this is where I'm looking for on all of the indices right now. I want to get a move back up to the 20 on the spiders. You might want to write that down. $86 would be the spot. Transports back up to the 20 again, even back up to the high in these two candles, 135.40, 134.60. I'm looking for that move to go right up into that area there as well. And the IWM is just, even if it could get back up to the 50, which I doubt, the IWM, it would be my first to short. Besides the spiders, this would be my first angle of short here, would be the IWMs, and that comes in right around the 114, 115 area, call it. That'll be the first area. And look what's happening here. We're getting it that cross, that cross the 20 going below the 50. So clearly we're having bearish symmetry here with our moving average starting to roll over here, okay? And we're at the 200 already on the IWM. Qs, same thing for me. The Qs, I would be the next area to short would be the Qs, and that would be 87.30. That would be right underneath the 20. And then what does that do? That coincides beautifully with this major uptrend channel from November 2012 low. So if you're going to look for an index to short, it's going to be the IWM or the Qs. Those are the two areas I'm waiting for in the next few days to look to short. Okay, diamonds, excuse me, diamonds held up relatively well. For some reason, I don't like trading diamonds. I don't like trading the Dow Jones. It's just a sloppy trader, and it doesn't really move as much as the Qs or the Russell or the spiders would. So I stay away from the diamonds, but I do my analysis off of the diamonds as well. All right, and lastly, we're going to see USO. Now, I like the USO. I like USO here, but it's got to come back into the 20. I like to see a pullback in crude. If oil pulls back, I'm going to look to buy it right here at 36.50. Now, I still like the truckers. I like UPS, but remember, when you have risk aversion, they're going to get hit as well as any other asset class. But if you're going to start establishing some long positions, I'd wait, but look for the solars again. SUNE for solar would be a great, and also coal. I mentioned coal. I'm looking at several asset classes to start establishing some long positions and even actively trading them during the day once we get through this volatility. But there's a lot of stuff to trade here, guys. But again, when you have markets just literally running up for 10 minutes, selling off for a half hour, running back up, it's hard to establish any type of position before you're getting stopped out. So it's a little frustrating, but hang in there. The markets, as you can see, are starting to turn, and we're going to have some really easy price action here coming in the coming weeks. Okay, have a great day, and we will speak to you tomorrow. Take care.